Hello Keystone Investors, welcome to another important discussion in the world of cryptocurrency. Today, we're focusing on tokens, key components within the vast ecosystem of blockchain technology. To put it simply, think of tokens as unique passes that grant access to specific functionalities within a blockchain project. They are akin to digital keys opening different doors, allowing you to trade them like shares or use them as virtual currency in an online environment. This versatility infuses the blockchain with dynamism and adaptability. And here's where it gets interesting. Not all tokens are the same. Mainly we encounter two types: utility tokens and security tokens. Each has a specific purpose, its unique rules, and its distinct advantages. Today, we'll dive into these two types of tokens. We'll identify their differences, weigh their pros and cons, and understand their role in the grand scheme of the blockchain world. And we'll bring in real-world examples to ensure that these concepts hit home. Here's the bottom line. The knowledge you acquire today could be instrumental for your future engagements with cryptocurrency. With a solid understanding of utility and security tokens, you'll be well positioned to navigate this emerging landscape. So I encourage you to stick around until the end of the video. Let's begin. We'll first start off by exploring utility tokens. So what are utility tokens exactly? At their core, utility tokens provide access to a product or service within a blockchain-based platform. Picture them as tickets granting you the right to participate in a particular network or system. Take, for instance, a blockchain-based gaming platform. In this case, a utility token might be used to purchase in-game items or unlock special features. Think of them as in-game currency, tokens you use to enhance your gaming experience. An excellent real-world example of a utility token is the Basic Attention Token, or BAT, which is used in the Brave browser. Brave is a web browser that blocks ads and website trackers, promoting a more private and secure browsing experience. The BAT token is used as a reward mechanism in the Brave network. Users can earn BAT tokens by choosing to view ads, and they can use these tokens to support their favorite website or content creators. In summary, utility tokens are your gateway to accessing, interacting with, and benefiting from a blockchain platform service. They give you the means to fully engage with all the opportunities a particular blockchain project has to offer. This could be anything from enjoying a smoother web browsing experience with Brave and BAT to unlocking the next level in a blockchain-based game. Now let's turn our attention to the other major player in the token arena: security tokens. Security tokens, as the name suggests, are linked to an underlying investment asset or economic value. Imagine a digital representation of traditional securities like stocks or bonds. These tokens often represent a share in a company, a unit of value in a fund, or any type of other financial asset. Unlike utility tokens, which are primarily used to access a service within a platform, security tokens are more about investment. Purchasing security tokens typically means you're expecting to gain some form of a profit in the future, such as dividends, revenue share, or price appreciation. An illustrative example of a security token is T0, a blockchain-based platform for capital markets. T0 token holders have the right to collect a percentage of the total revenue generated by the T0 platform. This mirrors the traditional stock market where the shareholders receive dividends, but in a decentralized, blockchain-based setting. Another example would be Blockchain Capital, a venture capital company investing in blockchain technology companies. They issue a security token called BCAP, representing an indirect economic interest in their investment fund. By purchasing BCAP tokens, investors essentially gain exposure to the performance of a diverse portfolio of pioneering blockchain companies. In essence, security tokens can digitally streamline and enhance the conventional process in the world of investments. From digitizing assets to executing smart contracts that automate administrative procedures, security tokens hold the potential to revolutionize how we interact with the financial markets. Now that we've established what utility and security tokens are, it's essential to understand the unique characteristics that differentiates them. One of the crucial differences lies in the regulatory considerations. In general, security tokens have to play by a different set of rules compared to their utility counterparts, because they're often classified as securities by law. This is determined by something called the Howey test, a criteria established by the US Supreme Court to identify whether a transaction is considered an investment contract. In addition to regulatory aspects, ownership rights and access privileges also differ substantially between utility and security tokens. Holding a utility token mainly grants you the right to use a specific platform or a service, like an all-access pass to a concert or an amusement park. On the other hand, security tokens often represent ownership or equity in an asset, functioning more like shares in a company. Let's also discuss risk and reward dynamics. With utility tokens, the token's value often depends on the demand for the service or platform associated with it. It's like buying tokens for a popular arcade game. If the game loses its appeal, so might the value of your tokens. Conversely, security tokens provide investment opportunities. The risk involved is tied to the success of the asset or the company they're linked with, much like investing in traditional stocks. Lastly, let's talk about trading restrictions and liquidity. Typically, security tokens face more stringent trading restrictions due to their regulatory nature, which can affect liquidity. Imagine trying to sell a rare piece of art. It might be valuable, but it could take time to find the right buyer. Utility tokens, while not immune to liquidity issues, generally face fewer trading restrictions and can be traded more freely, much like swapping concert tickets. Now in the next part, we'll take these insights and delve into how to evaluate these different types of tokens before making an investment. Now before diving into the world of utility tokens, it's essential to weigh their pros and cons. On the positive side, utility tokens are great tools for developers to raise funds for their projects. They can create and sell these tokens to finance their work. For instance, a new tech company might issue utility tokens to raise money to develop its software. Those tokens then could be used to access the software once it's developed. For users, the appeal of utility tokens lies in their potential. If you believe in a project's future success, buying its utility token early could grant you access to services at a fraction of the potential future cost. In a way, it's like purchasing tokens for a video game that hasn't been released yet. If the game becomes a hit, those tokens could become very valuable. But let's not ignore the risks. The value of utility tokens hinges on the success of the project or the platform they're associated with. If the project doesn't take off, the tokens could become worthless. It's like buying tokens for that video game and then the game turns out to be a flop. Also, the regulatory landscape for utility tokens is still evolving, which can lead to uncertainties. There might be future restrictions or laws that could impact their usability or value. So while utility tokens offer a unique blend of possibilities and risks, understanding their mechanics is key to making an informed decision about whether they fit into your financial strategy. When looking at security tokens, it's equally crucial to understand the potential benefits and pitfalls that come with them. One advantage for issuers of security tokens is the ability to access a global pool of investors. In traditional financial markets, geographic and regulatory barriers often limit investment opportunities. However, with security tokens, a startup in Berlin could potentially attract an investor from Tokyo. For investors, security tokens present an opportunity to own a piece of an asset that might have been out of their reach in the traditional financial system. Imagine owning a tiny fraction of a Picasso painting or a landmark building in Manhattan. Security tokens can make that possible as they can represent fractional ownership in such assets. Security tokens also promise increased transparency due to the immutable nature of blockchain technology. Every transaction is recorded and visible to all network participants, reducing the risk of fraud or misrepresentation. However, it's not all smooth sailing with security tokens. They're subject to strict regulatory controls, meaning that both issuers and investors need to navigate a complex legal landscape. Compliance can be costly and time-consuming, and falling foul of regulations can lead to severe penalties. Moreover, the market for security tokens is still developing. While this means there's enormous growth potential, it also signifies that the liquidity could be an issue. Like an auction for a rare piece of art, it might take some time before you find the right buyer for your token. So there you have it, a balanced look at the pros and cons of security tokens. Coming up next, we'll be discussing how to navigate your way through the decision-making process when considering investing in utility or security tokens. As we look into the future, it's clear that both utility and security tokens are poised to play pivotal roles in the evolution of the digital economy. They are, in essence, the building blocks of tomorrow's marketplaces and financial systems. The landscape of utility tokens is expected to become even more dynamic. As more innovative projects take root in the blockchain ecosystem, new utility tokens will emerge, each offering unique functionalities and utilities. Expect to see tokens that grant access to cutting-edge decentralized applications, or tokens that offer unique gaming experiences or digital content. We're just scratching the surface of how utility tokens can be used to create vibrant, user-centric digital economies. On the other hand, security tokens are expected to revolutionize traditional finance. Tokenization, the process of converting rights to an asset into a digital token on a blockchain, could make investing more accessible, efficient, and transparent. Think of how easy and straightforward it could be to buy or sell fractions of valuable art, real estate, or even future earnings of a celebrity or athlete. But as these developments unfold, they won't be without challenges. Both utility and security tokens will face regulatory hurdles. Compliance, transparency, and investor protection will be paramount. There is also challenges of scalability and ensuring that blockchain networks can handle growing transaction volumes without compromising speed or security. So as we wrap up, remember that we're standing at the cusp of a new era in the world of finance and digital economies. Both utility and security tokens offer enormous potential, but they also come with risks and uncertainties. Staying informed and understanding these trends will be vital in navigating this exciting, evolving landscape. We hope that this video has given you a solid foundation in understanding the differences between utility and security tokens. And remember, the more you know, the better equipped you are to make sound decisions. As always, stay curious, stay vigilant, keep learning, and I'll see you in the next video.